Hi, everyone. It seems like most of the good news has been left to me, so luckily I do have a little bit for you. I'm going to be talking primarily about the international situation, growth abroad, conditions abroad, and a little bit of the outlook, but tying it in, of course, to what that means for us here in the U.S., which is our primary interest for most of us. And I've heard the word recovery from both Johns now, recovery in the housing market, recovery in the bond market. And if I have a phrase for you to remember of what I think is going on globally, it ties into recovery, but it's this. Recovery doesn't mean return. Just think about it for a minute. Recovery doesn't mean return to what we had before. And I think if we can make that separation, that helps us get our mind around what the recovery might look like. Because it's very, very tempting to think it means a return to where we were. Housing prices back to where they were, bond market back to where it was, a lot of things, back to where they were. That tends to be our just, I think, the human notion of what a recovery is. You get sick, you recover. Well, this one is different. And I don't think recovery means return in a lot of markets. And in fact, I hope it doesn't, because a lot of those markets, as have been mentioned, were highly inflated and overbuilt and in a fairly precarious and dangerous position. So we really don't want to return to a lot of those conditions. We certainly don't want a return to the high leverage that led us into a lot of this. We don't want to return to the low savings rate that led us into this. So, if you follow that logic, there are a number of areas where we don't want to return, and that would be good. But there are some that I think a lot of us would like to see a return. I'd love to see the Dow at 14,000 again. That would make for a much earlier retirement for many of us. But even though some markets have recovered, I would stop thinking about a return to that level. Just natural appreciation at a normal rate, the normal rate that we expect the economy and corporate earnings to be able to grow, which, if you take it over a long period of time, is, the market should return somewhere around 7 to 8%, long run, not every year, of course, we've learned that. But if you take that type of a trend, we're looking at it taking a number of years to get back to 14,000 on the Dow, or some of the values you may have had in your homes or whatever other assets were involved. So we've got to wipe away the thinking that things are going to get back to where they were, and not only to these certain levels that we have in mind, but also to the way some of these markets operate.